Assalamu alaikum. Dear students, hope you are doing well. As you can see, a past paper question, an old past paper, 2001, paper code 0452/2, and my topic today is trial balance. Question number 4. Rick is a sole trader who makes cardboard boxes. The following balances were extracted from his books on 31st August 2001. Sales, purchases, debtors, creditors, cash at bank, rent and insurance, machinery at cost, provision for depreciation of machinery, stock at 1st September 2000, drawings, and capital, which is unknown. Part A, which is for 12 marks, using the columns below, prepare Rick's trial balance as at 31st August 2001, showing his capital account balance. So we have to find this capital balance. So first of all, as you can see that Rick is a sole trader. Sole trader means just one owner, a single person who is running the business. His accounting year is ending on 31st August 2001. So exactly calculate the 1 year when the business is, what is the starting date of the business? So the starting date of the business is 1st September 2000. Starting is 1st September 2000 and ending date is 31st August 2001. Exactly 1 year. The rule to make the trial balance is debit all the assets and expenses. Assets are the resources of the business and they are divided into two parts, non current assets and current assets. In non current assets, we say that the life is more than 1 year, land, building, machines, furniture. And current assets, life is less than 1 year, like inventory, closing inventory, cash in hand, cash at bank, debtors or accounts receivable. And then expenses, the day to day expenses of the business, like stationery, and similarly monthly expenses, rent, telephone bill, electricity bill, gas bill, salaries of the employees, traveling expenses, etc. Then on the credit side, we say all income, which includes sales, if there is any other income like rent received, discount received, then liabilities, current liabilities and long-term liabilities. Long-term liabilities, if they are more than 1 year, for example, the business has taken a loan from the bank or from friends or relatives, and current liabilities less than 1 year, like accounts payable, bank overdraft, etc. And then the capital, resources invested by the owner in the business. And similarly, in the debit, the opposite of capital is drawings, resources taken back by the business. So, on this rule, we are going to prepare the trial balance. So, let's see the items one by one. First is sales. So, sales is income, selling of goods by the business. It's called sales, and the value is 100,000. Then purchases, the goods bought by the business in order to resell it, and purchases are 70,000. Then debtors. Another name for the debtors, they are also called as accounts receivable, which means goods are sold on credit, or you can say goods sold to credit customers. So still the business hasn't received that amount, so the amount is receivable. So the debtors are accounts receivable, and they are our current assets. So it will be on the debit side. Then we have creditors. Creditors, another name is accounts payable. The business has bought goods on credit and the amount is not paid yet. So goods bought on credit from credit suppliers. Creditors. So right here, creditors, and the amount is 15,000. Then cash at bank. This is a current asset, 5,000. After this, we have rent and insurance. So business expense, rent, and insurance. All expenses are debit, so 4,000 is on the debit side. Machinery at cost. Machinery is a non-current asset. Non-current asset means life is more than 1 year to be used in the business, and generally they are not for the purpose of resale. So at cost means the price at which we bought this asset first time. So it was 50,000. So it is also on the debit side. Then we have provision for depreciation. Depreciation means a decrease in the value of a non-current asset. So this decrease is on machinery. So the value, it's decreasing the value of the machinery. So it will be on the credit side, because when the value of the machinery is increasing, it is on the debit. When it is decreasing, it is on the credit. It is also called as contra asset. So this provision for depreciation, also called as contra asset, which means that it will decrease the asset value. Then we have opening inventory. So stock at 1st September. This is the opening inventory, which means last year when the business accounting year finished, the closing inventory was 11,000. So it is also on our debit side. And then the drawings, the resources taken back by the owner, it is 9,000. And capital is the missing value. So we need to find this missing value. Total the debit side, the total of the debit side will be 70,000 plus 16,000 plus 5,000 plus 4,000 plus 50,000 plus 11,000 and plus 9,000. So right here you can see the double lines, which means that the question will finish here, 165,000. So both sides must be equal. This side has to be 165,000. So check the difference. The difference is on the credit side, you can see sales is 100,000, creditors are 15,000, provision for depreciation is 20, it's 135. So the difference is 40,000. So it means that the owner capital is 40,000. And in this way, our both sides are equal. Total marks for this part, as you can see, are 12 marks. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 1 for the total. So in total, your 12 marks, you will get 12 marks when all the values are on the correct side. Hope this information will help you in preparing the trial balance, and you can easily make your trial balance from the given data. Thank you so much for watching this video.